Welcome back. I'm Peter St. This is a weekly roundup of my daily videos on the economy and freedom, where I cut through the BS and lay out what the gaslighting clowns pulled out of their hats this week and what is coming next. The Federal Reserve just turned inflationary. Did Jerome Powell go full MAGA? Or is the Fed bailing out the stock market at the expense of the economy? Last week, the Federal Reserve met to fine-tune how they'll be manipulating the American economy. They kept interest rates unchanged at 4.25% as expected, but Powell dropped a big inflation bomb, saying the Fed will slash sales of government debt, which is so-called quantitative tightening. So instead of selling at a monthly pace of $25,300,000,000 per year, they slashed it to just $5 billion a month. This matters because when the Fed sells its hoard of government debt, it effectively cancels dollars, which lowers inflation. Just last week, I praised the Fed for being surprisingly deflationary, surprising considering its job to create inflation, and so much for that. The move leaves an extra $240 billion per year sloshing around competing with your dollars, driving up inflation. In fact, that's good for almost an extra point of inflation, which is the difference between, say, the Fed's 2% target and a 3% the media will call Trumpflation. The background here is during COVID, the Fed printed $5 trillion to buy everything in sight to finance deficits and bribe voters into lockdowns. This took their balance sheet from under $4 trillion pre-COVID to almost $9 trillion by 2022. Toss in bank lending thanks to zero interest rates, and it was $7 trillion printed. For perspective, that's roughly half of all the dollars in the world, so-called M2, pre-COVID. Of course, that gave us the worst inflation in 50 years, at which point the Fed flipped to selling everything in sight, along with hiking interest rates to choke the real economy. Now, the sales drained about $2.2 trillion off their balance sheet, which took inflation from double digits to, by Biden's curtain call, just 5.7% annualized. Alas, it looks like those days are gone, with the Fed now reverting to character, printing money, and leaving the mess for Trump. The question is, why is the Fed now pivoting to inflation? So the media has been pounding the drums for a recession, which normally makes the Fed crank up inflation to artificially stimulate the economy. But Powell dismissed these, saying the economy is doing just fine at slightly under 2% growth, while estimating the inflationary impact of tariffs at just 0.2% as a one-time hit. That leaves the more likely culprit, stock markets. So stocks have been falling on fears tariffs could disrupt profits as companies scramble for new suppliers, pay tariffs in the meantime, and get hit with reciprocal tariffs from other countries. Now, in theory, the Fed is not supposed to be manipulating the economy to boost stocks, but of course, a lot happens between theory and reality. So what's next? The Fed portrays itself as a big-brain Jedi council, carefully directing the economy. In reality, it is a pinball reacting to headlines to cover its butt while printing as much inflation as it can for Wall Street. This is great for stocks. It means the Fed has your back, the so-called Powell put, but letting the money roll is one more hurdle to Trump bringing down prices without setting off recession. Foreign companies are falling over themselves to invest in Trump's America, even as left-wing media pretends the Made in America dream is doomed. Turns out talk is cheap, show me the money. Last week, the United Arab Emirates committed to invest $1.4 trillion into the U.S. over the next decade, ranging from AI infrastructure to semiconductors to manufacturing and, of course, energy. Then, perspective, annual private net investment in the entire U.S. economy is about $5 trillion. So a third of that in a single deal. It's not just Dubai. Since the election, Japan's SoftBank announced $100 billion and 100,000 jobs, also for AI, semiconductors, and energy. Taiwan Semiconductor, the world's biggest chip maker, also announced $100 billion. Honda, Hyundai, Siemens, and AI chip maker NVIDIA have announced tens of billions. Saudi Arabia's Crown Prince promised $600 billion. Even American companies are coming home. Johnson & Johnson announced $55 billion in the next 4 years. Coincidentally, exactly Trump's term. Apple announced $500 billion to manufacture in America. So just these deals alone are 4 times the announced investments under Biden's 4 years, and we are precisely 2 months into Trump. In terms of jobs, those 2 months of announced deals could represent over 1 million new jobs. So what's driving it is simple: the 1-2 punch of tariff threats combined with a more welcoming business environment, specifically on red tape and Trump's plans to lower business taxes. Given where the investment's coming from, East Asia and the Middle East, there may be a political boost with countries trying to stay on Trump's good side so he doesn't choke off East Asia's export machine with tariffs or leave Saudi and Dubai to face Iran alone. All with an assist from the challenges of producing in China, which is the main competition given Europe's crushing regulations and taxes. China habitually abuses foreign companies, forcing them to hand tech to their competitors, making them jump through regulatory and political loops that can crush profits. Going by investment flows, many are already looking for an excuse to leave China. Now, I mentioned in previous videos how Trump's tariffs will absolutely work if they're a negotiating tool, since other countries need us much more than we need them. But the big game is bringing investment and jobs to America. There, it's not the stick, it's the carrot. As in, given the U.S. is 1/4 of the entire world economy, companies will fall over themselves to be close to customers if red tape and taxes are tolerable. So at next, on a global level, there's something like $15 trillion invested every year. If Trump keeps capturing that, $1 trillion at a time, we will see a giant vortex where the rest of the world is effectively starved of capital, while American prosperity returns to levels we have not seen in 50 years. Between mass deportations driving up blue-collar wages and mass investment driving up blue and white-collar wages, Trump is doing exactly what it takes to boost wages after Joe Biden's long draw. In fact, we could get so much investment that it drives up costs. There's only so much steel and construction workers to build factories, but so long as government spending is constrained and the Fed doesn't go nuts with the money printer, economy-wide inflation will stay tame even as investment booms and wages rise. In other words, clear the government dollars so that sweet mother's milk of prosperity can flow. A word from our lead sponsor, Unchained.com. In the new year, it's time to think about your annual IRA contributions. An IRA is an investment vehicle that can save you a lot of taxes. With Unchained, you can hold real Bitcoin in your IRA, get access to trading, inheritance, and loans, and it's the only company where you hold the keys and can verify that your Bitcoin is not being relent like banks do. We've seen futures-based ETFs underperform holding your own Bitcoin, so why settle for less? Book a friendly consultation at unchained.com/Peter. If you own gold or silver, you know they're a great hedge against financial instability and let you grow your wealth outside the banking system and gain greater control over your finances. Monetary Metals offers you the ability to increase your precious metal ounces every single month. Instead of paying to own metal, with Monetary Metals, you get paid 4% on your gold paid in more ounces. Now's the time to secure your wealth and build your legacy in an asset that the government cannot inflate away. Join thousands of investors earning interest in physical gold and silver every month with Monetary Metals. Visit monetarymetals.com/Peter to learn more. Now back to our show. The Democrat Party is on the verge of a civil war, a Tea Party-style insurrection that could cripple the party for years. So says government-funded newsine Politico, adding, quote, Democrats should be very afraid. In short, most Democrat voters think the party has gone off the deep end between infinite genders, open borders, and hug a criminal cities. But there's a very vocal minority who thinks the party is not crazy enough, that it needs to go all in against Trump, no matter if the policies are popular. The Civil War came to a head recently when Democrat Senate Leader Chuck Schumer bent the knee to Trump on the prospect of a government shutdown. Now, Chuck had to kneel since a shutdown would lay off hundreds of thousands of government workers who are the true base of the Democrat Party. Alas, many of the 95% of Democrat voters who are not government workers are happy to shut down the government. After all, it's Donald Trump's government. Now, inter-party fights are common in political parties. In a sense, every political party is a permanent civil war between its voters and its special interests. The voters want good things, the special interests want bad things, and the special interests usually win because money talks in Washington. But that gulf is currently huge in the Democrat Party, and the progressives see their chance to go straight for the jugular. Now, last time this happened in the U.S. was the Tea Party movement in the Republican Party. These were Republican voters pissed off about the 2008 bank crisis and bailouts, and the corruption it represented in both parties. There was a fun moment in 2010 where an establishment Republican welcomed support from the Tea Partiers, only to be told this is not support, it is a takeover. And what a takeover it was in just 8 years. We went from rhino candidates like John McCain and Mitt Romney to, by 2016, every leading candidate having Tea Party associations, from Ted Cruz and Scott Walker to, famously, Donald Trump. Meanwhile, establishment tool Jeb Bush flamed out on his tippy toes. Fast forward to today, and Trump has near universal support among Republican voters, while establishment Republicans lay low and hold on for dear life. Now, the kicker here is that the Tea Party takeover was initially crippling for the party because it meant knocking out long-standing incumbents with money machines and name recognition. This lost Republicans the House for 4 years, but it lost them the Senate for 8 years. In fact, until last November, 12 out of 14 swing state senators were Democrats. It should be 7. Montana, and even Alabama until recently, had Democrat senators. Georgia still has 2. In other words, insurrections invigorate a party, pulling it back to what voters want, but it costs you power in the meantime. So what's next? The most progressive wings of the Democrat Party are doing everything they can to gin up a left-wing Tea Party, with Bernie Sanders and AOC currently on tour. If they succeed, they could deliver a midterm victory for Trump that he could use to lock his policies into law. More important, while the Tea Party brought the Republican Party closer to voters, a Democrat Tea Party pushing radical socialism and identity politics of Bernie and AOC could actually drive away centrist Democrats, permanently crippling the party. This is already happening, so Elon, Joe Rogan, RFK, Tulsi are all, after all, former Democrats. The country would benefit from 2 sane parties, but Dems may be about to go even crazier. Will we get a recession from government spending cuts and mass deportation? My friend Ed Dowd is out with a new report predicting we could see a, quote, short but deep recession in 2025, driven by massive cuts to government spending. What's changed, according to Dowd, is just how much wasteful spending and corruption DOGE has uncovered. He calls the fraud, quote, mind-shocking. Now, we always knew there was a lot of waste in government. I'd guessed north of $600 to $700 billion, or about 10 cents on the dollar. But I, too, was pretty mind-shocked just how much pure corruption there is. To the point, taxes are effectively bankrolling the entire left and its NGO industrial complex, potentially to the tune of hundreds of billions. To give a flavor, one NGO led by failed Democrat Senate candidate Stacey Abrams had $100 in the bank, 0 full-time staff, yet it got a $2 billion climate grant. So this matters partly because it funds the AstroTurf left. It ain't democracy, it's money. But also because all those billions keep inflation going and prop up GDP, which bizarrely counts $1 billion in government handouts as if it was $1 billion cranked out by a factory. This all plays havoc with the economic numbers. So to illustrate, government-funded NGOs alone employ about 6 million people. If they were all fired, that alone would drive unemployment to 8% and knock consumer spending into recession. Meanwhile, Dowd estimates spending on illegals between $50,000 and $100,000 per illegal out of your pocket. Multiply that times 10 to 15 million illegals, and it comes to between 50 billion and 1.5 trillion reduction in government spending. Now, if that sounds high, last year New York City announced that it was spending $12 billion on illegal immigrants, including putting them up in luxury hotels. So if you put the NGOs and the illegals together, cutting off the free money could knock nearly 5% off GDP. That would make it a proper recession, actually a fairly deep one, with hundreds of thousands laid off from NGO activists to people providing free housing and free medical care to illegals on your dime. Of course, it would also be a massively wealth-generating recession. All those extra nurses and dentists mean you can actually get an appointment. But media will run with GDP and paint it black. Finally, housing. So Dowd notes that illegal immigrants have been holding up rent prices, which is keeping housing expensive. Mass deportation would be great for blue-collar Americans who could get a break on rent or even buy a house. But the drop in housing demand could ripple through prices, potentially, according to Dowd, setting off a 2008-style housing crash. Now, 2008 was more about liar loans and lending money to deadbeats rather than housing demand. Still, the heady days of double-digit growth in house prices could be over for a while. So what's next? Between cutting off 6 million NGO workers and 10 to 15 million illegals, we could be looking at the mother of paper recessions approaching demobilization after World War II. It will make us much richer as a nation and much safer, but we could indeed see a short, deep recession in 2025. Fortunately, we know what's on the other side of a government spending recession, a 1950s-style decade of prosperity. A word from our sponsor. One of the best ways to secure your Bitcoin is with a hardware wallet, a physical device that lets you keep your coins offline without internet connection. One of the most trusted names in hardware wallets is CoinKite, maker of the famous block clock. CoinKite devices are made in Canada and they're run by passionate Bitcoiners who've been at this since 2012, back when Bitcoiners were trading in person at swap meets. You can pick up hardware wallets and plenty of other goodies at coinkite.com/ProfSaintAnge. That's CoinKite.com/ProfSaintAnge. Okay, back to our show. Why do baby boomers own everything? Last week, Treasury Secretary Scott Bessent reported that the top 10% of Americans account for half of consumption, calling it, quote, unsustainable. This 10%, of course, is overwhelmingly baby boomers who spent the past 50 years having their assets pumped by the Federal Reserve while voting for big government that knocks the first rungs out of the career ladder for the young. The end result is boomers with vacation chalets, while for the young, wages are flat, prices are up, and buying a house or starting a family is a pipe dream. Instead, they lurk in mom's basement fantasizing about the revolution. The numbers come from Moody's Analytics, who finds that the top 10% of Americans accounted for just 36% of consumer spending 30 years ago, but now it's up to 49.7%. It's getting worse fast. In Biden's last year, the top 10th increased spending by 12%, while the other 90% of Americans actually spent less. So that's a so-called K-shaped economy, with the top living it up while everybody else gets killed. In fact, over Biden's 4 years, spending by the bottom 80% of Americans was flat, while the rich increased spending by nearly a third. Earlier this week, I mentioned how the Fed seems to be running policy based on the stock market, and this is part of the reason why. The rich are holding up the entire economy. It means stock prices and home equity are holding up the entire economy. A few years ago, the Washington Post published a chart showing shares of national wealth by generation. So by the time they were in their mid-30s, boomers owned 20% of the wealth in America. For Gen X in their 30s, it was 8.5%. For millennials in their 30s, it's not even 3%. So how did this happen? There's two main causes: growing government and the Federal Reserve. Between 1990 and today, inflation-adjusted federal spending more than doubled. Federal regulations have gone from 118,000 pages in 1990 to over 180,000 today. Regulation hits small business startups much harder. Manufacturing, for example, regulation costs small companies twice what it costs big business, who get to spread it over a bigger base. In fact, according to the National Association of Manufacturers, regulations cost small manufacturers more than salaries cost. Crippling small business knocks out the first rungs on the ladder. And by one estimate, native-born business formation is down 85% since 1990. Even bigger is the Federal Reserve. Since 1990, the Fed's average real interest rate has been just 0.1%. In other words, 35 years of free money. This has been amazing for boomers because zero interest rates make stocks and house prices soar. To illustrate, before boomers, in the 35 years from 1955 to 1990, both house prices and stocks went up by half, so 47-49% after inflation. In the 35 years since 1990, house prices went up 124%, stocks went up 600%. So anybody who owned a house in 1990 is rich. Anybody who owned stocks is a millionaire. And if you didn't own a house or stocks in 1990, you got the inflation that paid for it all. So what's next? The solution is very easy. Radically shrink the government, both dollars and scope, and get rid of the Fed. Leave interest rates to the market, limit money printing to either a fixed rate of growth, a so-called K% rule, or ideally to hard assets. Thanks for tuning in. Remember to subscribe so you don't miss an episode, and go to peterstandons.com for daily videos and in-depth articles with charts and all the gory details. Okay, we'll be watching. See you next time.